The S&P 500 just hit the 99th percentile, and the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,230.1, the 99th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Says, the data needs to confirm. The commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Score 1 for the commodity analyst. Commodity supercycle. Oil agrees at $101.9, 132-day streak. Gammon just moved from wrong to right. Gammon is right and the data keeps proving it. Yield curve at 0.51%. Snyder just moved from wrong to right. Snyder is right and the data keeps proving it. Yield curve at 0.51%. The volatility expert just moved from wrong to right. The volatility expert is right and the data keeps proving it. VIX at 16.9. McElroy might be right, but the data has not confirmed the thesis yet. 131-day streak. Hartman might be right, but the data has not confirmed the thesis yet. 125-day streak. The dollar analyst just moved from right to early. Too early to call the dollar analyst right or wrong. The thesis is building but not confirmed. Score today, 4 right, 3 early, 0 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question: are commodities in a supercycle, or is this the top? On one side says the data needs to confirm. That is the setup. Everyone hears it on the podcast. It sounds convincing. On the other side, the commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what makes this interesting. Oil is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $101.9, 97 percentile, down 3% today. Gold at $4,630, 76 percentile, up 0.3% today. Copper at $5.93, 90th percentile. Bottom line, right now the commodity analyst has the better case. Oil at $101.9, 97th percentile, says the data is moving their direction. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $101.9. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $101.9 is in the 97th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,630. We'll track it daily on the scoreboard. Phase 1 is the good times. But good times do not last forever. Here is how close we are to the edge. We are 69 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet. But we are watching the pace, not just the level. The trigger, investment grade spread, crossing 150 basis points. Currently at 81 basis points. At this week's pace, that is roughly 69 weeks of runway. That is late August. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has yield curve, initial jobless claims flashing red. Gammon says, the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 69 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. New York, NY, payment burden is past the breaking point. New York, NY, median home about $751,000 on about $38,000 household income. Price-to-income ratio, 19.6. When the math stops working, sellers find out before buyers do. San Diego, CA, payment burden is past the breaking point. Rancho Santa Fe, CA, median home about $4,657,000 on about $238,000 household income. Price to income ratio, 19.5. When the math stops working, sellers find out before buyers do. Saguache County, CO, builders are pouring concrete where nobody can afford to buy. Saguache County, CO permitted 104 units this year, up 104% year over year. Affordability score in 81,000, 155, 27, 100. Supply chasing demand that doesn't exist at these prices. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Oil at $101.9 is in the 97th percentile. That means it is higher than 97 out of 100 days in the past year. In 2022, oil spiked above 120, then demand destruction pulled it back 40% in months. In 2020, oil went negative for the first time in history as demand collapsed. In 2018, oil dropped 40% in Q4 as growth fears overtook supply concerns. Different environments, different catalysts, but every time the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, copper at $5.93 is in the 90th percentile. The last time both oil and copper were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, the commodity analyst is on the right side of this trade. The data is not ambiguous. Here's what the data says to do right now. Stay alert on VIX. It is dropping 10.2% today. Fast moves demand attention. Avoid Phoenix at 40% payment burden. That is stretched territory. Phase 1 holds. No alarms, but the runway at 69 basis points is shorter than last month. 4 out of 7 speakers are right, the commodity analyst, Gammon, Snyder, and the volatility expert. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.